Well, welcome to Investor in the Family Radio. This is Brian Bain, your host, and today we have guest Ray Merola with us. Ray, welcome to the show.
Thank you. Thank you for having me.
Well, it's an honor to have you with us today, Ray. And recently, Ray wrote an article on Seeking Alpha entitled Energy Transfer, The Tide is Turning While Stomachs Are Churning. And I'm sure many people long energy transfer can relate to that title pretty quickly. But it was an article that caught my attention. And so Ray was kind enough to join me here on the show to discuss the article further. Ray, for people who have not yet read the article, do you mind giving a little bit of background on what it's about and kind of what your primary thesis is?
Well, Energy Transfer is a midstream MLP, and like many others in the space, they've certainly hit hard times, especially after the 2015 through almost 2017 energy price crash. And I have been long ETP in ETE for a long time, and I've more or less tried to objectively provide information to investors that generally comes out as a positive investment thesis in saying the company has good strategies, it has good plans, it's making good numbers financially, and basically to hang in there. And in the meantime, investors get a very rich distribution.
Well, let's talk about the fact that, I mean, obviously, Energy Transfer has been hit really hard. You mentioned primarily by the crash in oil prices and energy prices starting back in 2015. And we're seeing in a number of different companies, and this is June 2018, a number of companies in the energy space are seeing some nice appreciation currently. Whether it lasts, no one knows that. How is Energy Transfer doing in that regard? Are they seeing some uptick? Have they continued to struggle?
They are seeing an uptick. There's no question about that. I mean, indeed, I think the shares are, say, post-April, up 25%, either ETP or ETE, but it's off a pretty low base. So I think people have been investing through the lean times, probably are still not above water. But people who got in, kind of after the first quarter report, I think are doing really well.
Well, was there anything behind the hit that Energy Transfer has taken beyond the drop in oil prices? I mean, were they really overextended, extra high debt like a lot of companies were, or was there more to the story?
There's a lot more to the story, and that's one of the things that makes Energy Transfer so fascinating. In addition to, I'll just say, an energy price commodity collapse, which knocked back a lot of the midstream MLPs, Energy Transfer has several things that have also, you want to say, aggregated to really cost them. One of those is the fact that, and I guess I'd sum it up by saying pioneers take the arrows. They have gone out with a big capital or major capital growth initiative, which involves not only really big infrastructure projects, pipeline and transportation, but they're trying to do them in parts of the United States that are openly hostile to anything having to do with fossil fuels. And so I think part of what's happened is maybe a bit of a miscalculation on their part, but I think it's understandable, is that things that they're trying to do in the Northeast and even in parts of the Midwest, like DAPL pipeline, there are left or green groups that really have mobilized with a lot of money, and they hire people to go and to protest and to do whatever they can to block the projects. That's hurt them because it's cost time. They've been lawsuits filed against them, so on and so forth. I might point out is that generally it looks like they prevail in the end, but this all takes time and hurts investor confidence. Two is they embarked on this big, I'll say, initiative for all kinds of growth capital. I think it was $10 or $11 billion at the depths of the energy collapse. So financially, they struggled because they had to come up with the capital because of the unit price compression. Raising money through equity became very difficult. They were straining the limits of their leverage. And so, once again, there were a lot of questions about they'll have to cut the dividend. Can they stay solvent? What are they going to do with these projects and so forth? And then the third thing, if I might, is their founder or one of their leaders is Kelcy Warren. And Kelcy Warren, one of his mottos is "Go big or go home." He can be a controversial character. Some investors may remember Energy Transfer got mixed up with the Williams Company and an acquisition, and they ended up in court, and they were suing each other and calling each other names. And Kelcy Warren tends to get a lot of face time as the front for the company. And again, I think that created some crisis of confidence, if you will.
How long has Kelcy Warren been in the leadership of Energy Transfer?
To my understanding or my knowledge, he is the originator or the founder.
Okay.
Going from way back when. It's kind of his baby. Gotcha.
So with these things you mentioned, as far as, they've taken on major infrastructure projects in hostile areas in the U.S. that looks like they may prevail, but has caused lots of, corollary damage in the meantime. They've embarked on a big initiative for growth capital in the depths of the energy collapse. So they've really just stretched themselves financially in terms of raising money via equity and even debt. And then, of course, both those sounds like they roll right into number 3 with Kelcy Warren as leadership, because one of the questions I was going to ask before you mentioned point 3 was, well, do these points 1 and point 2 significantly reflect as far as like negative leadership moves, or have they been positive, bold moves, if that makes sense?
No, it makes a lot of sense, and that's, to me, part of the investment thesis and why Energy Transfer can be polarizing. I don't see any what I would call bad management moves. It's simply, as a matter of fact, I think they're good management moves, but the issue becomes style and approach. And so Kelcy Warren he's aggressive. He doesn't tend to back down. He probably is looking out for interests, but I'll say his fortune is tied up in Energy Transfer Equity, which is the GP. And so he gets a lot of flack for that about, well, is this going to be done fairly? Is that going to be done fairly? Because most of his personal wealth is tied up there. So he's a very controversial figure. And I think what investors need to do as part of the thesis is say, do you want to follow the guy or not? If you think that he's going to end up winning, if you will, I think it's going to turn out to be a really good investment. But if you just can't stand the guy or the senior management team, as with any other investment, then I encourage investors, well, you know what? Go find a company and a management team that you like, that you can appreciate.
Well, and just to be clear on that, you mentioned his fortune is tied up in EPE, which Energy Transfer Equity. And could you just break out briefly the difference between ETE and ETP?
ETE is the general partner. It's an MLP structured company, but it's the general partner there's actually a family of companies, Energy Transfer Partners, ETP, being the LP that is associated with ETE or most associated with ETE. So the general partner effectively has some level of ownership interest, but primarily creates or generates cash through IDRs from the limited partner, in this case, ETP. And IDRs are incentive distribution rights. So effectively, the profits of the asset holding company, which is ETP, are shared with the general partner. And that's how Energy Transfer Equity makes most of their cash, though, again, they have some other interests and so forth.
Okay, so just to be clear, ETE is the general partner for a family of companies that includes ETP, and
Yes.
and ETP is the LP, the limited partner primarily associated with ETE. And so
Yes.
the general partner, meaning ETE, Energy Transfer Equity, has some level of ownership interest in ETP, Energy Transfer Partners. And
Yes.
but the role of the general partner, ETE, is they help generate cash through IDRs. I think I missed a little bit of the description. They generate cash through IDRs that help support the LP of Energy Transfer Partners. Is that?
Really, what they do, energy transfer equity skims off cash from energy transfer partners. It's done contractually when the limited partnership is set up. So it effectively, there's a split, if you will, of profits and cash. And the cash that goes to energy transfer equity is their primary source of cash and income for that entity.
Gotcha.
All right. And one of the things in your recap that actually is a good point that's helpful. Energy Transfer has been and still is somewhat a complex organization. In many cases, the general partner and limited partner are combined into one entity. In the case of Energy Transfer, they're split, coupled with the fact that there's also Sunoco LP, and then there was another roll-up with Sunoco Logistics and Energy Transfer Partners. And there's just been a lot of M&A activity, consolidation, and ultimately simplification. But I'll just say the path has been long and winding. And one of the things that investors generally don't like is complexity.
Sure.
And energy transfer has been kind of hard to understand sometimes and complex, though I will say, again, it's on the downhill side. Ultimately, you're going to see energy transfer equity and energy transfer partners roll up into one company. And I think, again, that will just be one more step in the simplification process.
I suppose it's set up the way it is for like asset protection type situation, like legal reasons in that sense, or is there some other reason they may have it set up in the complex way that it is?
The GP-LP structure is, I'll say it's somewhat standard in the way that I think it's a combination of the tax laws and customary structure is done. It's getting a little bit, I'll say, outside of my understanding and knowledge of why it's set up that way, but I know how it's set up. Now, the reason why, again, I think there's latitude when you set up a MLP and there's certain rules, process. The GP-LP is not so much, I think, separation because of liability. I think it's a structure because of the entity and tax code.
Let's just talk more about the bullish thesis behind energy transfer. As far as, in your article, you mentioned, some of your summary points where cash flows are significantly higher and the slate of major growth projects is chugging along. Stockholders continue to wring their collective hands over the projected roll-up. Unit valuation metrics, you said reside in alternate reality, unfortunately. But that's unfortunately, that does not help energy transfer investors. So you mentioned a few things there that sound like a bullish points. Do you mind elaborate on those a little bit?
Yeah, and I think I could boil a lot of it down to this. Earlier, we talked about that Energy Transfer had embarked upon this enormous growth capital initiative. So in order to do that, they had to raise and spend lots and lots of capital. Again, like 10 or 11 or $12 billion. Well, the projects that they were undertaking were not, 3 months and the project is up and running. These are multi-year projects in many cases. So what they had to do was effectively spend lots and lots of capital, but then the returns, the cash flow on these, they come later. And so that was stretching them financially. And then coupled with the fact that, again, they ran into litigation and regulatory issues and there was under a lot of pressure, that also stretched or delayed the actual conclusion of some of these projects. And so the bullish thesis is really, it looks like these projects now are getting completed, they're coming online, and this wave of cash is all going to start to wash back in where it's been pretty lean prior to that.
And let me see. Yeah, so we said stockholders continue to wring their hands over the projected roll-up. What roll-up are you referring to specifically?
The roll-up that I'm referring to is something that Energy Transfer Management has talked about on several of the most recent conference calls, and it's the combination of the GP and LP into one entity, meaning ETE and ETP will become one.
And you mentioned obviously shareholders don't like complexity. Do you see much benefit to the organization apart from the fact that would give shareholders more clarity in terms of how they relate, or is there like actual significant organizational benefit beyond that?
I think there's some organizational benefit. I think there's a trend in the midstream MLP business to combo the GP LP interests, which effectively do away with this whole IDR business and so forth. So I think that is going to be a net positive. But prior to the announcement and having that done, which several things are going to have to get into place before that can be completed, it creates, again, uncertainty. And then so the ETP unit holders are wondering, well, am I going to get a fair shake on this? You know, I got this really big distribution. Is the distribution going to get cut? And if you're on the ETE side, it's like, well, I'm on the same side with Kelcy Warren, but, you know, if they're afraid about lawsuits when they try to do a roll-up, you know, is there going to be some kind of something's going to happen to me that's not what I expect, or that's no good. And so I look at it as, I think that when this is done, it's going to be positive. It's going to work out for the best. And so my view is, if you own some of ETE and some of ETP and just let it play out, you'll be fine. But I think that many good people would just say, you know what, too much uncertainty, too complicated. And so in the meantime, they dumped it. They dumped the units.
On that unit point, when you mention unit valuation metrics, what are you referring to? Do you mean by unit? Do you mean ETP is a unit and ETE is a unit?
Yes.
Okay.
Because
gotcha.
because they're MLPs. They're actually not they're not shares. They're actually units. So even though it's all stock, it's equity, but technically it's a unit and not a share, because a share would be more like a corporation. Gotcha. This is a midstream MLP. It's a pass-through entity.
Gotcha. Okay, that makes sense. And then you mentioned when the terrain is dry and scorched, it does not preclude a gold mine below the surface. That was a great line. Do you mind elaborate on that?
Well, thank you. I'm not I'm going to say I'm not a financial analyst. My background is not finance. It's actually engineering. I write because I love writing. I like investing, and I like just sharing my thoughts. And so sometimes I try to put something in there that would maybe be an analogy that might be a little more colorful than just kind of, facts, figures, and numbers.
That's great.
And so, yeah, I think energy transfer, you look at the surface and it's like, man, look, they got all of these problems, all this complexity and uncertainty, and then we don't like this, and they're fighting fronts or fighting battles on 10 fronts. But I think below the surface, again, there's a mother lode of cash. I think what they're doing is going to work.
Great. I'm taking notes. I'm pausing.
I've hung in there with energy transfer for a long time. I mean, this energy collapse in 2015, I had these units a long time before that. So that's what I've been. I've hung around with these guys and, if you will, Kelcy Warren through thick and thin.
We'll be sure and send him a link to the interview when we're finished.
Yeah. I know a couple of the guys that work with energy transfer. So,
cool.
Yeah,
that helps a lot. Yeah, well, I'm sure with your was your engineering background in petroleum engineering?
No, it was not. I'm a civil engineer, and actually my relationship with energy transfer is actually something could share with the listeners. As a private, an individual investor, I have never been afraid to go call the investor relations or even the management team of some companies, and I've been very pleasantly surprised. And energy transfer is one of them. That's why I know anyone at the company. It had nothing to do with my professional work. I just called them up. I said, I got a bunch of questions, and I'm here to tell you. This was quite a number of years ago, but I called and I had a bunch of questions, and one of the investor relations guys said, "You know what? We're going to get back to you." He gets back to me. It was set up a conference call, and it was with the CFO of the company, one-on-one. He goes, okay, yeah. And he goes, I'll sit on the call and listen to y'all, but here's so-and-so. He's the CFO of the company. Ray, go ask him the questions. And I just wow, okay, that's pretty good.
Wow. As the bell tolls in the background. That is I'm so glad you said that. That's one of the fun things about these interviews is, you start the interview with a certain focus, which we have, and that's been great. But I never expected that to come up, because that's something I think I can speak for most investors in saying that people just assume that it would just be a dead end street. If I called investor relations or sent them an email or a letter, maybe I'll get a canned response.
Absolutely
if anything.
not.
So,
Absolutely not.
Good for you for taking that proactivity and for challenging us to do the same.
I can tell you this, that I have had discussions, voice discussions, in many cases multiple over the years, with companies like Alaska Airlines, Macy's, AT&T, Nucor. I can go right down the line, and they're not all. Now, on the other hand, there are a couple of them that, truthfully, they won't give you the time of day.
Sure.
And if that's the case, I generally are looking for an exit strategy from that stock, because I'm not expecting anyone to kowtow. But if you can't even respond, I would be a concern, right? But no, I've generally had pretty good luck, and I think primarily it's don't go in complaining, don't go in making stuff up, or not having done your homework. But if you go in and say, look, I'm an investor and I got some questions and I'd like to talk to someone, I found that in a majority of cases that somebody will either respond or set you up with someone who does know, and so forth. I've had I've learned a tremendous amount through discussions with IR. Or the management itself.
You mentioned having done your homework in advance. Like, do you, for investors out there thinking, "Wow, that sounds intimidating. How should I go about doing that?" Not actually reaching out, but preparing for it. I assume you probably look through financial statements and company presentations, and you did your own due diligence trying to find answers. Yeah. And once you couldn't find answers, those are the questions you then took to investor relations, I'm assuming.
You hit it right on the head. That's exactly right. So I look through the earnings releases or investor presentations. You look at the conference calls and either listen to or read the transcript. And then maybe there's something based on that it's like, well, I don't really get it, or I don't understand it, or maybe there's a level of nuance. And so then you call them with specifically, and they recognize this because they're used to dealing with analysts, the professionals. But say, like, look, I'm calling not just a chit chat. I have a specific question about something I saw in a filing, or something in a presentation that you wrote, or something that management said on the conference call. And they'll talk to you.
That is fantastic. Well, and the thing about that too that I like is, one of the things that's difficult as individual investors is it's so helpful to have an understanding of management. And you can listen to, and I think you can gain a lot by listening to calls, because you can just get a feel for how they respond to questions and stuff. You can kind of just discern some of their, I guess, their integrity and character to a degree. But
yes.
It's an interesting test of, like, can you call them and will they respond? Again, if they don't, then that may say a lot about the company, and may think, well, that doesn't mean it's a terrible investment, but it just communicates a little bit about the values of the company, which could impact, your decision making.
It could, and I'll add one other point that I think is important. You mentioned about wanting to understand or kind of identify with management, and I think that as an investor, that's a critical item. So you can look at all the numbers and presentations and this and so forth, but at the end of the day, these are businesses that are run by real people, okay, that are professionals, and they have a job to do, and it's up to you to understand, well, do you think they're up to the task or not? And you can ask questions. And then to take it one step further, there's two other analogies I would use. One is, if you're a manager in just a regular business, your own, you're a professional of some sort. I always looked at it as I moved through management, that a big part of my role was simply discernment. All day long, people are going to come in and tell me stories, right? So it's my job to determine, well, is this guy believable, and does he tell me stories that come true? Or is a person that when they make commitments, do they keep the promises? Or is there another guy that gives me a big shtick, and then at the end of the day, it's just telling me what I want to hear, but it doesn't matter again to get a result at the end. That discernment to me is a big part of investing. And that goes along with another thing, and I used to be an athlete, okay, is coaches make a difference. You know, if I was going to say I'm going to put my faith in a football team, okay, whether or not you like Bill Belichick is a good coach, and he has winning teams. And if I was saying, well, does he make a difference? Yes. I don't care what you think. Bill Belichick makes a difference. Well, CEOs of companies make a difference too. And as an investor, to me, that's one of the important things to do is I'm looking for, is this guy more like a Belichick or this guy more, and you fill in the blank, but the guy that just got fired?
Nice. Excellent. Man, Ray, I'm so glad you brought that up. Like, that encourages me a lot, and it gives me more fodder and things to consider when I'm evaluating investments, and I know will for our listeners as well. And thanks for all your time walking through, doing the research and back leg work on energy transfer and sharing so much of that with us today.
You're very welcome.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.